complete preparation from raw data. We have not been given any statements or account. The following informations were obtained from books of Dignity Foundation Recreation Club on 31/3/2024 at the end of the first year of the club. First year. So this is the first year, then definitely we don't have the opening statement of affairs. Okay. They have now invested and started the club in the very first year. You are asked to prepare receipts and payment account, income and expenditure account for the year ended, as well as the balance sheet as at the date. Is that okay? Under mercantile system. So let's now open all the ledgers and statements. So you have to open receipts and payment and income and expenditure and all. So open all the requisite statements and accounts. Receipts and payment. Receipts and payment account. Receipt side. Payment side. Income and expenditure account. Expenditure as well as income. And then we have the balance sheet. Balance sheet. Donation received for building and library room being 1 lakh. So this donation is a specific donation, can be used only for constructing the building or library room. Until the construction is over, it may be kept as a building or library fund in your library site. Is that okay? Now, this is received in the receipt side, the value being 1 lakh, and it will be transferable to the balance sheet. Okay. So here, donation received for building as well as library room, 1 lakh. As it's a specific donation, not being the income to be transferable to income and expenditure, can be transferable to the balance sheet. In balance sheet, building or library room fund, the value being 1 lakh. The value being 1 lakh. Clear? Other revenue, income and actual receipts. Revenue, income and actual receipts given here. Clear? We have to incorporate this. And other revenue and actual payments. Other revenue and actual payments. Okay. So I have to incorporate all these things. Donation to the extent of 12,500 were utilized for the purchase of library books. Donations. Okay. So how much is used for purchasing library books? 12,500. Balance was still unutilized. In order to keep it safe, 9% government bonds of 80,000 were purchased on 31/3/24. Remaining amount was put in the bank on 31/3/2019 under the term deposits. Is that okay? Actually, donation fund being 1 lakh. In that 1 lakh, 12,500 is used already for the library books purchased. Library books purchased. How this will be recorded? How this will be recorded? See here. I'm going to incorporate this one first of all. So we received donation 1 lakh, and in that donation 1 lakh, 12,500 is used for purchasing library books. Library books. How much? 12,500. Okay, and it will be asset in the balance sheet. Library books. 12,500. And in order to keep it safe, 9% government bonds, 80,000 were purchased on the year end, exactly last date. Bond purchase, G bond purchase, government bonds purchased, 80,000 rupees. A government bond being the asset, I put that value in the asset side, government bonds, the value being 80,000 rupees. We collected around 1 lakh rupees donation for constructing the building and constructing the library rooms. Clear? This amount can be used only for the specific purpose. So we used the donations to the extent of 12,500 for purchasing the library books. Apart from that, still we have almost 97,500. So if I keep it in a savings bank, I mean misused, right? So in order to safeguard, out of the amount I collected by way of donation, 80,000 is invested for the government bonds. Government bonds. Right. The remaining amount was put in the bank. Balance amount is put into the bank. Maybe you can consider this being the balance available there itself or bank. Okay. I'll just keep it as it is. I'll adjust this later on. Finally, that 8,000 rupees. The 7,500, I can adjust that later on. Depreciation at the rate of 10% per annum was to be provided. So, on this depreciation being 10%, 1,250. After that, the library books written down value being 11,250. The depreciation will be debited to the income and expenditure account. Expenses side, right? So, depreciation to depreciation for library books. Value being 1,250. So, I have posted all these things. Clear? Now, so this particular one remaining amount was put into the bank. I assume not to be considered because I'm not opening the cash book separately as well as bank account separately. This itself cash and bank. So automatically the entry seems to be contra, it will be cancelled. Yes, finally you can show it separately also, no problem there. But for the simplification of this illustration, I just skip that one. So I prepare the cash and bank put together as a single one. Is that okay? Single one. Now, entrance fee received being 20,000 rupees and income is also 20,000 rupees. This is receipts, this is income. 20,000 is the amount received. That 20,000 is considered as revenue income, will be transferable to the income and the expenditure account. So here, entrance fee. This value being 20 and also being income, post that in the income side by entrance fee. Entrance fee could be of revenue as well as capital in nature, but here it is clearly stated revenue income, revenue nature. So the value being 20,000. Oh, okay. should be in the receipt side. I was thinking why you are so silent today. Hmm? I missed this entrance fee. Are you able to understand? In the very fresh morning, seems to be very dull. Huh? Get ready now. Okay, 20,000 rupees. Now the next one is subscription. Come on, tell me. What about the 16 receipts? What about the 17 actual revenue income? What about the difference between these two? Outstanding. So outstanding will go where? In balance sheet asset side. So subscription receipt. Subscription receipt. The value being 16 only received, but consider the income being 17,000 rupees. Though the income is 17, we received only 16, another 1,000 still pending, maybe outstanding subscription. Outstanding subscription being the asset posted in the balance sheet asset side. Outstanding subscription. This value being 1,000. Locker rent. Receipt also be 800, income is also be 800. There is no advance or outstanding. So receipt side, locker rent. Okay, locker rent. 800 rupees and post that same in your income side. Come on, join with me to solve this. You start right immediately along with me. Come on, make it faster. Make it faster. Be active. Sundry income. Actual receipt 860, but income, sundry income is 1,400. What does it mean? Receipts being sundry income 860, but sundry income in total being 1,400. The difference between these two is what? Receivable, outstanding income, receivable being asset. Outstanding sundry income. Outstanding sundry income. How much is that? The difference between these two? 540, am I right? 540. Sundry income. Refreshment account actual receipts 20. Refreshment account actual payment is 12. We collected around 20,000 rupees for spending for refreshment, but out of that 12,000 used. Is that okay? So receipts and then payment is there. The difference could be considered as surplus, may be used for the subsequent periods refreshment purpose, not being your surplus to be posted in your account. So refreshment receipts, receipts for refreshment. The value being 20. Payment for refreshment, 12,000 rupees. The difference between these two, we have surplus amount can be used in the next year's refreshment purpose, or it can be considered as income. That's your choice. If nothing stated, is your choice. Special purpose. For the special purpose, you collect some money and use that money for the special purpose only. So we collected the money for the refreshment and we use the money for the refreshment. If there is any result of that, either surplus or deficit can be transferred to the income expenditure account type 1. The other way, the difference can be used for the subsequent periods requirement. So in that case, it may be kept in the balance sheet liability side. So refreshment fund. We have around 8,000 rupees surplus can be used for the next year's refreshment. Land purchased for 10,000 rupees, it's a capital. So not being the revenue expenditure. So in payment side, land purchased for rupees 10,000. As it is being the asset, post that in the asset side, balance sheet, land value being 10,000. Furniture 1,30,000 rupees. Payment, the cost is 1,46,000. Come on, tell me. The payment for furniture in this case being 1,30,000, but the furniture value in this case being 1,46,000. The difference between these two is nothing but creditors for the assets. Okay, creditors for purchase of furniture. How much is that? 14,000. Salaries payment is this much, but expenditure being 6,000. Salary, payment for salary being only 5,800, but salaries expenses for the period being 6,000. The difference between these two, 200 rupees, still to be payable until it is settled. It may be outstanding. So outstanding salary is a liability here. So outstanding salary being rupees 200. Maintenance of club, actual payment for maintenance of club, maintenance of club being 2,000, and the actual expenditure for the maintenance being 3,000. So the actual expense is 3,000. As it's now, you have paid only 2,000 rupees. Another 1,000 can be payable later. Until that period, it's a liability. So outstanding maintenance expenses. Rent matches. So payment for rent also 6,000. For the period, the rental expenses also 6,000 in the expenditure side. Hope I have posted all these items in the concern statements. What? Yeah. Furniture being 16,000. Okay. This is 16,000. Good. Yes, come on. Find out the receipts and payment and find out if there is any balance. Receipts and payment. I think 2,65,800. Are you getting this value? No, it's not matching. You will be getting the value in the payment side. Right. What's the value in the payment side? 2,65,800 rupees. 2,65,800 rupees. Apart from that, you have kept around this much amount in the bank account. How much? 1 lakh, 12,500 used for books, 80,000 used for bonds. What about the left one? 7,500. That balance is deposited into the bank. Maybe this may be assumed to be the cash column only. Then on deposit, in the payment side, you post the balance as bank, amount deposited to the bank. How much is that? 8,000 rupees. Then automatically it will appear in the bank account, bank column. Okay, 8,000 rupees. We don't have bank column separately prepared. Whatever the final value we have now, 8,000 rupees is transferred to the bank account. That's all. So the receipts and payment can be assumed to be only cash transaction. Okay, out of the donation collected, we used for purchasing the library books as well as the investing in the bond. Leftover amount is invested in the bank. So bank took cash. I posted that in the payment side of the cash book. In the case of bank, it may be appearing in the receipt side. Anyhow, if you show that 8,000 rupees here, cash, this balance will come as an asset in the balance sheet. That's all. Asset in the balance sheet. Come on. Tally this. Find out if there is any difference. I think it is 73,800, isn't it? Are you getting this or not? This bank is 7,500. Sorry, 7,500. Okay, how much is that? 7,500. 7,500. Bank or time deposit being 7,500. Find out the total in the payment side. 2,65,800. Am I right? 2,65,800. What about the balance you are getting here? 1,08,140. This will be the initial capital fund invested. Capital fund invested. The capital fund will go to the balance sheet. Capital fund invested in the period. 1,08,140. Is that clear? So there is no opening cash balance. The trustees may invest, or the members of the club may be investing in the very beginning itself. That amount is 1,08,140, may be considered as capital fund. Are you getting this value or not? Come on, do verification. Okay, now come on, tally the income and expenditure account, find out whether there is surplus or deficit. Do we have any depreciation for the furniture? 10% to be provided for the whole of the year and furniture as well as library books. For the furniture also, 1,46,000 minus 14,600. 14,600. What is the ultimate furniture value? So here, depreciation for the furniture being 14,600. Yes, tell me, depreciated value of the furniture. 1,31,400. Now tally the income to expenditure account. Hope we'll be getting the surplus 39,200. 39,200. Maybe excess of income over expenditure. Excess of income over expenditure. Over expenditure. This value being 8,350. Transfer and add with the capital fund surplus. 8,350. Get the total of balance sheet. Hope this will be agreeing with 2,41,690. 2,41,690. Clear? Now let's move on to the next one. Now, question number 9, one of the comprehensive illustrations. I request you to join. Don't copy after completion. Okay. Solve this illustration along with me. So it's one of the toughest illustrations for foundation level. Okay. For intermediate level, these kinds of questions you may expect very often. Okay. In CA foundation also sometimes such a question is expected. At least few illustrations. You have to be master with this particular illustration. One of the beautiful, comprehensive illustration. Prepare income and expenditure account, closing balance sheet, and receipts and payment account. The following is the receipts and payment. Okay, closing balance sheet from receipts and payment account. Okay, so we have been given the receipts and payment account, and all the things are raw data. If all the things are given as a raw data, it's better to start with the opening statement of trades. Whether it is asked or not, it's better to open that to find out any missing data like capital fund or general fund in the very beginning. Then, as per the requirement, you have to prepare, okay, income and expenditure account as well as closing balance sheet. These two are going to be prepared. Yes, come on, open the console ledger. First, finish off opening the income and expenditure account as well as balance sheet. Now, opening statement of affairs and closing balance sheet, income and expenditure account. Yeah, come on, tell me where these things will come. Let me first finish off the adjustments. I marked down the adjustments here. A, B, C, all are related to the subscription. D, a life membership scheme was introduced in 2023. Under this scheme, life membership premium is ₹1,000 and it was to be apportioned to income 1/10 every year over a period of 10 years. Life membership subscription totaling 5,000 was collected during 2023. So we have been given 3 adjustments for the subscription. Apart from that, one additional information regarding the life membership scheme. So in subscription, 3 adjustments we have been given, and a new concept, life membership subscription scheme introduced. You have to do a detailed analysis for this. On 1/1/24, so we supposed to prepare for which year? 31st December 2024. So 1/1/24, 6% investment was 40,000 and accrued interest on such a date was 2,400. So investment is made or investment available as in this date being 40,000 and interest on such a date being 2,400. Is that okay? Year beginning information, year beginning investment. Okay. Interest on investment. We have the adjustment here, one adjustment. And 1/1/23 furniture costing 16 was purchased and it was decided to write off depreciation of furniture and sports equipment at the rate of 10% on cost. We have been given 2 assets, furniture as well as sports equipment. 2 assets are there. Okay. Do you have any sports equipment and furniture here? Yeah, sports equipment we have. We need to do the adjustments for that. A plot of land was purchased for ₹20,000 to construct the clubhouse. A new asset comes here in 2023, not in this year, previous year, previous year. Yeah. Yeah, so what? This 16,000 rupees worth furniture purchased in 1123, previous year, the day one. But with respect to the sports equipment, that date is missing. Maybe purchased in the current year. Okay. So you just go and refer the payment side. Sports equipment is given in the payment side means it might have been purchased in the current year only. You can understand. But of course, what about the furniture? That furniture is missing here. It means the furniture is purchased in 2023. Sports equipment purchased only in this current year. In this current year. You understand? One of the beautiful illustration. Actually, while solving this illustration yourself, probably in the post-lunch session, you have to work out separately, right? By the time you try to solve the same illustration, now listen and try to solve the illustration, just keeping the ideas what we have learned here. It just definitely takes at least half an hour, more than half an hour to solve, even though after listening the lecture. See, so one of the beautiful illustration. Enjoy learning this. A plot of land also there, but purchased last year, not in the current year. Other assets, stock of refreshment. So there is an adjustment for refreshment, especially for the purchase of refreshment or payment for the refreshment. And prepaid insurance. For insurance also, there is an adjustment. And rent, accrued rent. Okay, there is an adjustment for accrued rent. Rent of clubhouse. And creditors for refreshment. So for refreshment, there is one more adjustment. The purchase of refreshment is not in the form of cash, purchased in the form of credit. One of the interesting illustration. We'll try to solve this one after one slowly. Come on. First to finish off, the sum seems to be pretty massive. Okay, when I was a student, no, the moment I see this sum, immediately think about discontinuing the course. But now you have to get yourself motivated to solve this illustration. Come on. The known thing you have to finish up first. Known thing you have to finish up first. Thereafter, the tough, complicated sum you can touch. Is that okay? Let's start with receipt side details. Receipt side details. Yeah. Come on, start posting one after one. Cash in hand. Opening cash in hand will be in the opening statement of affairs 1000. Guess the answer and tell me. What about cash at bank? Here, bank. In the opening statement of affairs, opening asset 12,000 rupees. But what about the membership subscription? We have almost 6 adjustments. It's better to open the working note here. Okay, so the working note for the subscription being subscription received is starting at outstanding of the current year less advance of the current year less outstanding of the previous year at advance of the previous year. Finally, you will get what? Subscription income. They received its income. Now, tell me, how can you record these values? Membership, member subscription. Make it fast. Make it fast. Should be posted twice if it is given in the adjustment. If it is given in the statement, then it should be posted only once. Come on. Guess. Where to post? Come on. Sir, we are waiting for your answer, sir. Come on, tell me. Yeah. What is the amount actually received? This will be the receipts. Here, 4,200. Posting in the adjustment also considered as posted once. What about this detail? This is nothing but adjustment item, like outstanding of the previous year might have been received in 2023's value received here. Then it is outstanding of the previous year posted twice here, as well as previous year outstanding being the asset by the time, so outstanding subscription in that year. What's the value? 200. Right. What about this 400? What about this 400? Also an adjustment. In 2024, you are receiving for the 2025's subscription. Means you are receiving in advance. Current year advance. Yeah, current year advance should be 400 subtracted. Another place where should come closing liabilities here. Subscription received in advance. The value being 400. What about this 3600, sir? I'm not sure. I'm not sure with that 3600. Whatever the in this year's subscription, no, out of that 3600 received. If the current year's subscription may be 4000 rupees, 3600 received means balance 400 may be outstanding of the current year. I'm not sure with that. So I'll just keep it as an additional information. Current year value being 3600 received. It has no use at all. Okay, we'll check whether it is used later on or not. Until that period, just keep it a pending amount like. Now, one of the fantastic adjustment is the life membership. Life membership. Is that okay? Fantastic adjustment. You need to have the broader understanding. Okay. Solve numerous illustrations to master this topic. Yeah. Working at note number 2, life membership subscription. Life membership subscription. Okay. Received in 2024. How much is that? 4000. I have to adjust this separately. Keep it pending. Sale of ticket for annual exhibition. So you are conducting exhibition once in a year. For that you will get revenue, and for that you will spend money for that. Okay. So the revenue will be posted in the income side. So by sale of exhibition ticket. Sale of exhibition ticket. The value being 20,000 rupees. 20,000 rupees, sorry. Sale of refreshment. Sale of refreshment, also income. Sale of refreshment. The value being 24,000. Interest on investment, there is an adjustment. I have to handle it separately. Interest on investment. We know that it seems to be accrued like. 6% investment was 40,000 accrued interest. So it's an outstanding only. Then how do we solve this? Interest on investment received, add outstanding of the current year less outstanding of the previous year. Ultimately you will get what? Interest on investment. What's that? Income. Start with the receipts and payment, end with income and expenditure. Come on, tell me, what about this 2,600? Where to post? Where to post? It's a receipt because we are taking it from receipts and payment account. So here 2600. As I'm transferring from the statement or account, it should be posted only once. So there's a dot. Yeah, of course, there's a dot for adjustment. We'll incorporate later on while studying the adjustments. Sale of furniture rupees 200. Sale of furniture rupees 200. The original cost of the furniture being 1000 but sold for how much? 200 rupees. Means there may be profit or loss. Loss or profit? Maybe profit. Profit or loss? Why not profit? So how will you calculate the profit or loss on sale of any assets? Hmm? Hmm? After? After depreciation. This 1000 is the original cost. You have to subtract probably the depreciation is 900 on this asset. 1000 minus 900, 100 being the WD value sold for 200, then there is a gain. Assets now I am not aware about nothing. Clear? So be careful. That's why I tell you this is one of the most interesting illustrations. If you expect this sum in your examination, how will you feel? You'll just see the question and stare the question, and then you'll make the. I made a wrong choice. So you have to practice regularly. So now, better we can open the furniture account. Better open the furniture account. Is it needed, sir? No, not required. Not required. I already told you, while studying the depreciation chapter, master with the depreciation chapter, because these things will have the applications widerly in all the places. Even at final level, this may be simple adjustment. For that, you need to understand how to open the assets account. Go and master the depreciation chapter once again. So, sale of furniture, cash or bank, value being 200. Original cost being 1000. I am not aware about its WD value, so I keep it pending to be adjusted later on. Later on. Is that okay? This original cost as on which date? 1000 on 1123. 1123. Is that clear? Any doubts here? So currently I have completed the receipt side. Still I have to go for payment sides to be posted. Payment side. Yeah. In payment side. Now what happens here? Rent of a club, there is an adjustment for rent of club. Okay, this is fourth one. Fifth one being rent of club. Rent paid. I am not sure whether there is outstanding or advance, but only one dot is there. Painting of clubhouse. Painting of clubhouse, no adjustment. You are pretty sure that it's the expenses only. So painting. Value being 1400. Wages of ground maintenance. Wages of ground maintenance. Wages 3000. General expenses, no adjustment. You are sure that it is expenses only. Post that in the payment side, expenses side. Electricity charges. Electricity. The value being 3600. Revenue expenditure. 6% investment purchased on 1/11/24. Investment purchased. Then it becomes an asset. It becomes an asset. Investment. Is there any investment already exist? I'm not sure, so I'll keep the new purchase item separately here. Add purchases. This value being 20,000 rupees. The date of purchase being 1/11/24. 1/11/24. I think ETH point 1124 6% investment already exists. Also there. Earlier we have the investment. In the current year we made one more investment in on 1/11/2024. Is that okay? Secretary honorarium expenses. Secretary's honorarium. The value being 1,200. Annual meeting expenses. Annual meeting income and expenses. Okay. Annual meeting expenses. The value being 800. Sports equipment. Sports equipment. I think, I'm not sure whether do we have in the beginning any sports equipment, but anyhow just leave the space and plus purchases. Plus purchases. Data purchase is missing. If the data purchase is missing, you have to calculate the depreciation. Means you can either calculate for the newly purchased item also with the same rate of depreciation for the whole year, or you assume that half of the depreciation may be provided. That's your assumption. You can give the note of, okay, in case for the calculation of depreciation. Payment to creditors for refreshment. Okay, payment to creditors for refreshment. Come on, tell me how to handle. You might have purchased a refreshment. Okay, that purchases may be credit. Sometimes later the creditors may be paid off. So it is better you need to prepare refreshment purchases account and the creditors account also. Let's see here. Fifth adjustment. Sixth adjustment. What is that? Refreshment. Opening stock of refreshment. Opening stock of refreshment or add purchases of refreshment minus closing stock of refreshment. Finally, you'll get what? Consumption of refreshment. That consumption is the expenses. Consumption is the expenses. Now, apart from that, creditors for refreshment. Is that okay? In case of creditors, opening balance should be in the credit side. Closing balance should be in the debit side. If the creditors is increasing, post that in the credit side, decreasing, post that in the debit side. Payment to creditors for refreshment means you are settling, so the balance will go down. So bank or cash for the payment. How much is that? 11,000. See, when you are purchasing in credit, we need to parallelly open two ledgers. Two ledger account. One is for movement of the stocks used and consumed, purchased, and all these things. Opening stock plus purchases minus closing stock. Ultimate consumption will be there. If the purchase is being in cash, directly this will go to the payment side. If the purchase is being in credit, it will go to the creditors and the payment will be routed through the creditors. Understand? So here it is creditors. Apart from that, we have been given printing and stationery. Printing and stationery. Printing and stationery. The value being 1,000. And insurance is there, cash in hand. Cash being 4,000. Bank being 12,600. Insurance 600 rupees. Insurance being 600. I'll put that a separate working note, like so. This is 7th one. 8th working note is also about insurance. Insurance premium paid. Do some plus or minus to arrive the final value be transferable. So I have Now open almost 8 adjustments here. 8 adjustments. Let's start with the adjustments here. Let me finish off A, B and C. 3 adjustments related to subscription. Let me finish off all the 3 first of all. In single shot we can finish off. Yes. 31/12/23 outstanding subscription being 300. This is nothing but previous year outstanding. So previous year outstanding, we thought it is 200. No, it is 300. No, it is 300. Is that okay? But what about the 200 rupees here, sir? Out of 300, 200 is received. So 300 was the outstanding of subscription in the previous year. Out of the 300, 200 received. Another 100 still to be receivable in this year and also. Then it is considered as your asset. So outstanding subscription. In outstanding subscription related to the year 2023 being 100. Sir, in 2023, we thought we have to receive 300. Out of that, 200 is received in 2024. Yes, balance 100 to be still receivable as on the year end 31st December 2024. May be receivable the next year. First point is over. Advance subscription for 24 received. Advance subscription. Which year's advance? 2024's value received earlier. Means in 23 itself. So advance subscription being the liability by the time. Subscription advance. How much is that? 100. That 100 advance may be adjusted in the current year. May be adjusted in the current year. Advance of the previous year 100. Advance of the previous year being 100. 31/12/24 outstanding subscription. For the current year, there is outstanding. Current year outstanding being 600. Again, it should be posted where? Here, 2024. 600. So the outstanding subscription in this case being 700. Out of the 700 outstanding being the asset, comprises the outstanding related to 2023. Another 600 related to 2024. So 2 outstandings are there. Is that clear? So with that, we have completed the subscription related adjustments. Hope now you'll be able to understand. So now the beautiful illustration, I request you to finish up all the illustration yourself by working without referring. Right. Let's try to finish up subscription first of all. Any doubts here? 4,200 plus 600, 4,800. Now, 4,200 plus 600, 4,800 minus 400, 4,400 minus 200, 4,200 plus 100, 4,300 is the subscription income. Current year income being 4,300. Okay, that's the logic. This one is for additional learning. 4,300 is the current year income will be posted in the income and expenditure account. So, subscription. This value being 4,300. Clear?
The difference on the outstanding, current year outstanding.
No. 4,300 minus 3,600. How much is there? 700. 100 rupees was already collected. So still outstanding 600. So this 100 plus 600, 700 will be this value. Is that clear? You can cross verify that also. Okay, if you want. So we have completed 3 adjustments. 3 adjustments. 1, 2, 3. Let me try to finish up the H1 easily. Okay. I'll finish off H. Stock of refreshment. Opening and closing. Opening stock 3,800. Closing stock 4,200. Double entry. Opening stock being the opening asset in the balance sheet. Opening statement of it should be posted on the asset side. Stock of refreshment. 3,800, and stock of refreshment 4,200. Prepaid insurance minus prepaid for current year plus prepaid for previous year. Finally, you'll get the insurance expenses. Prepaid for the previous year 140, for current year it is 100. Prepaid in the previous year will be the asset in the previous year, prepaid insurance 140. Current year that value being prepaid insurance. I don't have space. The value being 100, current year advance. Is that okay? Now in insurance, 600 minus 100, 500 plus 140, 640 will be the insurance expenses. So insurance expenses to be debited in the P&L account or income and expenditure account, in this case being 640. Accrued rent, opening and closing, outstanding. Add outstanding of the current year minus outstanding of the previous year. Right. So outstanding of the current year 200, outstanding of the previous year 400. Clear? Now, outstanding in the previous year being the liabilities of the previous year, outstanding rent. In the previous year 400, in the current year 200. And we have been given creditors for refreshment, creditors for purchasing the refreshment item, opening 800, creditors for refreshment in the year end 1000, double entry. We have already opened the refreshment creditors account, so you can directly post there. Opening balance being 800, closing balance being 1000. So we have completed this adjustment. Now tally this. The total being 12,000. Opening we have 800. 11,200 could be what? Come on, tell me. What about this 11,200? Purchases of refreshment. Purchases will go here, 11,200. This balance is transferred to this place. Clear? Opening stock plus purchases being 15,000. From there, if you subtract 4,200, ultimate value being 10,800 is the consumption. 10,800 is the consumption. The consumption is the expenses post that in the income and expenditure side, especially expenditure side, refreshment expenses. 10,800. Refreshment expenses. Value being 10,800. Now, we'll move on to the land. In 2023, a plot of land was purchased for 20,000 to construct the clubhouse. Land. In 2023 itself, the land is there. So, in the opening balance sheet itself, we have the land 20,000 rupees. Remains unused in this year also, the closing value also being the same 20,000 rupees. Is that clear? No depreciation. We are holding the land as it is. It involves no depreciation. Now, furniture related adjustment. Furniture related adjustment. F. We try to solve the furniture related adjustment now. Yeah. On 1/1/23, furniture costing 16,000 were purchased. When? Last year, the day 1. So here, furniture. Come on, tell me. What's the value? This is the balance sheet for which date? 31/12/2023. 1/1/23, the furniture purchased for 16. For the year end 31st December 2023, what could be the value? After subtracting 1 year's depreciation, am I right? So the depreciation eligible for that being 10%. So 1,600 might have been depreciated. Then the value being 14,400. Original value being 16,000. Original value being 16,000. It was decided to write up the depreciation on furniture and sports equipment at the rate of 10% on cost. Clear? Sports equipment. Right. Come on. What is the purchase of sports equipment? Payment side 3,600. We don't have sports equipment in the beginning. Newly purchased in this current year only 3,600. 3,600. Is that okay? Clear? Now, sports equipment is eligible for 10% depreciation. As nothing stated, it's your assumption. Can we calculate the depreciation for the whole year or half year or no depreciation? That's up to you. But anyhow, 10% is given here directly, right? On cost, original value. Directly, original cost method, straight line method. So you can calculate the depreciation on this minus 360. Then the value being 3,240 depreciation. Depreciation for sports equipment 360. Apart from that, furniture is there. Furniture is there. So for furniture, is that okay? We have already opened the furniture account. In furniture account, what is the opening balance? Opening balance 14,400. I am preparing furniture for the year 2024 end. And is there any addition in the furniture? No addition. No additional purchases. You can provide the depreciation on the asset on original cost. The original cost of the furniture being 16,000, 10% on being 1,600. So depreciation on furniture being 1,600. Is that okay? I calculate for the whole year and assume the furniture sold only the last day of the year. Oh, the date is given here 1/1/25. It was sold 1/1/25. Then you have to calculate the depreciation carefully. Clear? Now, how can I calculate the depreciation? How can I calculate the depreciation? The overall furniture value being 16,000. Out of that, 1,000 value asset is going to be sold. 15,000 value of the asset remains as it is. Cross verify the working note here. Okay. Actually, the original value of the furniture being 16,000 purchased on 1123. For the year 31/12/23, we provide the depreciation at the rate of 10%. 1,500 and here 100. 1,500 and 100. Is that clear? Now, leftover value being 13,500, 900, 900. As the date of sale being 1125, you have to now calculate the depreciation for the current year 31/12/24. For this asset 1,500. For this 900 from the year beginning to the date of sale. The date of sale being 1125. 1125, right? The next day, it means it is eligible for full year's depreciation. Full year's depreciation. When the sale happens. Sale date given or not? Original cost is given, sale date is not given. As sale date is missing, we assume the sale happens the day one itself. When it is sold, the day one itself. As on the date, the book value being 900 and assumed it is sold in the day one of the current year. It is not eligible for the depreciation. 900 rupees worth asset sold for how much? 200. Leaving 700 being the loss. Leaving 700 rupees being the loss. I am going to incorporate all the six. Depreciation being 1,500 for unsold furniture. Loss on sale reduces the value of the asset, which is 700 rupees. So for the furniture for the current year, unsold asset 15,000 on that original cost based valuation at the rate of 10% and the original cost 15,000, 1,500. Another 1,000 rupees worth assets sold, but we don't create any depreciation for the current year. We assume the sale happens the day one itself. So the 1,000 as on the day beginning 1/1/2024 already 100 rupees depreciated. It's only 900 rupees sold for 200 means there's a loss 700 rupees. Loss on sale. Loss on sale. The value being 700. Is that clear? If I tally this, what happens here? You'll get the closing value. Come on, find out. 14,400. 14,400. What's the balance here? Furniture account balance. Hmm? 12,000. Okay, 12,000 is the furniture account balance. I'll post that here. Furniture, 12,000 rupees. This working note is very, very important. I segregated that sold furniture, unsold furniture. For the sold furniture, I have calculated only 1 year's depreciation. Thereafter, the WD value is 900. Sold for 200, then I lose around 700 rupees on sale. So, loss on sale. The unsold another asset, no, for that the years 2024 years depreciation being another 1,500. After that, the value being only 12,000 rupees. We have done this. So with that point, F is over. On 1/1/24, 6% investment was 40,000 and accrued interest on such date was 2,400. What does it mean? 1/1/24. In the year end, the investments value 40 and accrued interest on that being 2,400. It means as on 31st December 2023 already exists in the balance sheet. Here, investment. 6% investment. the value being 40,000 rupees. Accrued interest being the asset on this, accrued interest being 2,400. Income receivable. This is balance sheet. Clear? Double entry, double entry. This investment becomes investment here, 40,000 already, 6% investment. Currently, we purchase another 20. And accrued interest of the previous year. Okay, outstanding of the previous year. I post that value here. What about the current year's interest, sir? Current year interest being 2,600. Cross verify that. So for 40,000 rupees, this year remains unsold. 2,400 is eligible. In this year, again, I purchased another 20,000 rupees worth investment, carries 6% interest, and purchase date being 1/11. So 11 and 12, 2 months interest will be there. So for 2 months, come on. The value being 200. So the overall interest for the period being 2,800, which is the amount credited in the receipt side. Okay. This amount is here. You have to post this amount here. Is that clear? This is what about the investment income. I'll post that value here. Interest on investment. Interest on investment. 2,600. 2,600 is the current year's interest. Current year's interest. By tallying this, what happens here? 2,600 plus 2,400, 5,000. What about this value? With that 2,600, it should be how much? 2,400. Am I right? The 2,400 being the outstanding of the current year. 2,400 being the outstanding of the current year. Is that clear? Outstanding interest on investment 2,400. Okay. Outstanding interest on investment, the value being 2,400. Clear? The final point to be noted here is very, very important. Okay, what is that? D point. One of the interesting illustration. Due to this one, it seems to be very interesting one. Life membership scheme was introduced in 2023. Under the scheme, life membership premium is 1,000 and it was to be apportioned to income 1/10 every year over the period of 10 years. Don't pay your subscription year on year. Pay 1,000 rupees. Forget about paying the subscription for 10 years. So in 2023, the receipts being how much? 1,000 rupees. If you receive this 1,000, this will be applicable for over 10 years. It means income being 100 for 23, 100 for 24, 20, 25, 100 goes on for how many years? 10 years. Thereafter, the remaining 1,000 you paid for that year is only 100, balance 900 being what? Your liability cycle. Okay, subscription received in advance, like our annual subscription, lifetime subscription received 1,000, 100 is used. Next year, 100 is used, 800 will be there in the liability side. Next year, 100 is used, 700 will be there. Until it gets completely used, it will be appearing in the liability side. Is that clear? Don't pay your subscription fee year on year. Pay in lump sum, 1,000 rupees. Forget about the year on year subscription for 10 years. Right. Life membership subscription totaling 5,000 was collected during 2023. So in 2023, they have collected how much? 5,000 rupees. It means from 5% it might have been collected in which year? 2023. How much can be used as income for the same year? 1/10 500 rupees. Okay. Do we have any other life memberships subscription collected in this year? In this year also we collected another 4,000 rupees. Okay. Receipts in 2024 being how much? 4,000 rupees. This one collected in 2023. In that year you use 500 rupees. Thereafter year on year you are using 500 rupees for how many years? 10 years. In this current year 2024, this is 2023. Now in 2024 again 4 more members also paid 4,000 rupees. Sir, I don't want to pay year on year. I'll pay 1,000 rupees in single shot. Forget about paying or don't ask me subscription for over 10 years. So out of 4,000 rupees, 4,000 rupees of receipt, 400 will be the current year income. Next year another 400. That goes up to how many years? 10 years. 10 years. Clear? You understand the logic? In 2023, from 5 members, we collected 5,000 rupees. Out of that, the year's subscription income receipt side, means the revenue receipt will be 100 per member. So for 5 members, 500 rupees taken. Balance 4,500 remains as a liability. Next year, this is in 2024, 500 will be the income. Out of 4,500, already 500 rupees is used. Another 4,000 will be still liability. Thereafter, another 500 rupees you are using. 3,500 will be the liability we have. Thereafter, 3,000. That goes until it becomes 0. Every year now, for 100 rupees, I am subtracting from the life membership is collected. So, in 2023, 5,000 means per member 1,000, right? It means 5 members could have paid the full membership fees for the lifetime. In 2024, another 4,000 received, means another 4 members also gave the life membership. In that 4,000, it is given the receipt side. 400 will be the revenue for the period. Balance will be the liabilities in that year. How much? 3,600. Next year, in that 3,600, 400 rupees is for the next year's revenue used. So, next year's liability being 3,200. Thereafter, again another 400 has gone. So, 2,800 will be your liability. It goes year on year. Now, come on. What about the total income, sir? Total income for the year 2024. From the 23 receipt, 500 will be the income. For the 24 receipt, 400 will be the income. Overall income from this case being 900. And what about the liability, sir? For the 2023, we have used to 500 plus 500. Still, we need to, we are liable for them to the extent of 4,000. And for the current year value, 400 is used, 3,600. Still, I am liable for the subsequent period. So, overall value being 7,600. This will be shown in our books. See here, life membership fees. Life membership fees. The value being 900. And life membership fees, liability side, membership fees. Here 4,500. Here life membership fee. How much is that? 7,600. 7,600. Refer the working note in the previous page. One of the most comprehensive illustration, as already I told you, right? Take the challenge. Behave like a professionals to try to solve this illustration yourself during the working hours without seeing the illustrations. Right? Come on. Now let's try to finish up the illustration one after one. Opening statement of affairs. What's the total here? Will you be getting 94,040? 94,040. So balancing figure 88,240. Capital fund. Capital fund being 88,240. and working note number 1 over 2 over 3 over 4 rent paid 2600 plus 200 2800 minus 400 2400. This is what about the rent expenses. Here rent being 2400, rent being 2400, and this one is also over. Credit charge for refreshment over. The life membership fee worked separately. Now come on, this one is working note. This one is working note. Okay, come on, tally the income and expenditure and find out the balance if any. Purchase 11,200. This one not posted. 11,200 not posted. In the book, from the 24, this 11,400 is subtracted rather than posted that in the debit side. Refreshment 10,800 should be removed. Okay. Yeah, consumption 10,800. Sorry. Here. In the text, what I have done, this 10,800 is subtracted from here. You can work out either way. You put the 24 here and 10,800 in the income side, or you can adjust the value in inner column. Both the way you can solve. Yeah, come on. I think you will be getting surplus or deficit. You'll get the surplus being 21,800. Surplus is transferred to the balance sheet here, addable with the capital fund, 21,800. Now find out the total of balance sheet. Sale of? It is adjusted this way in the book. 24 minus 10,800. That's how it is shown in the text. That's why I am explaining here. You can put the value 24 in the income side and 10,800 in the expenses side. Okay, come on. Total the balance sheet. I think the balance being 1,19,240. 1,19,240. Here investment value being 60,000. Yeah, it's now agreed.